So welcome to today's meeting. So today we'll be talking about order flow. So we'll be talking about order flow. Now, firstly, the main idea of understanding of order flow is personally understanding the full idea of higher time frame bias. The full idea of higher time frame bias. The full idea of higher time frame bias. Now, that is the main thing you have to understand. That is the main thing you have to understand. That is the main thing you have to understand. The full idea of what higher time frame bias. Now let's take, for example, we have this area as our a lower low, last lower high we had, and we have a lower low. So since lower, this time frame is to the downside, and we have where we had the last area of what minor break of structure, and this is what a strong high. Why? Because it took a low, a low. So is what it grabbed liquidity grab high. So since it grabbed this liquidity, that means this high is a strong high. So the internal structure within this range, well, let me use a different color. Better still. So the internal structure within this range is telling you that this is the main structure range. So the main structure range. So when market gave us this BMS around this area, this short BMS, now it shows that they are going to clear both this high, and this high. Why? Because within this internal structure range, where market gives the minor BMS is here. This one we have a minor break of structure. So market shows that it would clear all these ones. Now run to this very area before giving us a sell move. So because of that, we are on this time frame, the order flow on this time frame, on this monthly time frame, order flow on M time frame is bearish order flow. Order flow on this time frame is what we call bearish order flow. So since this time frame is bearish, now if this time frame is bearish and weekly is bearish, two time frame makes an order flow. Now let's take, for example, this time frame is bearish, weekly is bearish. That means order flow on weekly is bearish, order flow on monthly is bearish. So with these two time frame, this higher time frame will control everything on lower time frame. Now because this time frame is bearish, we are still bearish on this time frame. Order flow on this time frame is bearish, structure on this time frame is bearish. Now with this order flow, we check again what is weekly doing mostly. Now if you check on this weekly time frame, on this weekly bias here, and how to understand order flow is this. Now from your range low to your range high, now you have to calculate 50% of the range. You have to calculate 50% of the range from that time frame, from your range low to your range high on that time frame. You have to calculate 50% of the range on that time frame to know if market has changed order flow. Now because market was able to trade up to 50% of the range on this range, this shows that this time frame is bearish order flow. That means bearish side has continued. Bearish sign has continued. Now when we learn about trap, this area is what we call a trap move. There's a reason why we don't look for anything to buy around this area. Because other SMC trader or other traders, they will be looking at this area as a clear SC or a clear order block or a clear supply zone to buy. Then we know that market will hit their stop loss first before we enter. So we always wait for them to take stop loss first before we enter. We always enter at the accurate level, which is what we call trapping. Now, because of this, market has gone to 50% of the range. This shows that we are bearish on this time frame. We are bearish on this time frame. So since we are bearish on this time frame, that means order flow on this time frame and on this weekly time frame, monthly time frame is bearish. Now you go to daily, the same thing. Now on this daily, now you have to note your range high to your range low. This is your range low. This is your range high. Now we are not talking about structure here. We are just talking about range. Now, once you notice your range, now you take your Fibonacci, you calculate your range, 50% to 50%. Now, market has given us a definition that this bearish order flow has ended. Why? Because it has entered the bullish order flow. So that means on this time frame we are bullish. The order flow on this daily time frame is bullish. So this is how you calculate your bullish order flow. Now, since market has now failed around this area, failed with this structure to take this low. So this simply means, now I want to explain something now to you guys. Now, when a low, market is creating a lower low, a lower high, a lower low, a lower high, a lower low, a lower high. Now market is about to create a lower low. It failed to create a lower low. This high has not made a lower low. So once it failed to make a lower low and break a restructure, note it break a restructure, break our major structure within this within this area. It break our major structure within this area, break the major structure, not the range structure or internal structure. Break the major structure around this area, break a major high. So once market break this major high, then you're expecting market now to take this very high. So this high is what people call weak high. So we always, or we call it inducement high. We call it inducement high. You can call it a weak high or inducement high. So we always expect market now to reach this very high and run back into this former zone without breaking this former zone and continue sell off and continue selling off. This is basic idea of how you have a failed high. So this high failed to create a lower low. This high failed to create a lower low. So that is what we call a weak high. It has not yet created a lower low. So it's a weak high. Now take for example here on this pair. This is our range low. This is our range high. Now this low, this high failed to create a lower low. This high failed to create a lower low. So since this high failed to create a lower low, this means that we have what we call a failed high. This high here is a failed high. So we call it a failed high. We are expecting market now to reach that very high because is a failed high. So now after market gave us a minor structure break here around this area, it continued with the structural range, higher high, higher low, from the internal structure. Use the internal structure and imbalance, just like we said, unmitigated zone. Boom. Continue higher high, higher low, higher high, and continue making to the upside. Continue making to the upside. Now with time, I'll be giving you some model that you need to be trying. Now it continue making structure to the upside till it get to this very level. Now we expect market to rate this very high, then drop down to continue the weekly order flow. This is how order flow works. So you have to understand the two time frame that are closer to use it to define the lower time frame. Now because monthly and weekly is bearish, that means because this daily is bullish, that means this daily is corrective wave. That means this daily is corrective wave. This daily time frame is bullish, but this is not an order flow. This bullish move is only a corrective wave. So the order flow of this pair on monthly and weekly is bearish order flow. So what is happening here, this little bullish move that's happening on this daily time frame is what we call a corrective wave. It's what we call a corrective wave. So this is the basic idea of understanding what a corrective wave. So after market continues to the upside, you notice from here now, note this. This is where market gave the what last deep corrective wave to induce liquidity. This was where market induced liquidity last. So that means this is area is where market induced liquidity last. So as market induced liquidity here last, if market would have continued, if this area failed to create with this little structure that it was creating around this area, with this thing that is creating here, if it failed to what now use this one to take the low, what market would have done is this: create a lower high, then create a lower low. But it failed that. It failed what? It failed that. So since market failed that, also broke this high. So this within this structural range, this is the major BMS. Why this is the minor BMS? This is the major BMS. So since this is the major BMS, around this area, these two did not mitigate the last internal structure, which is what around this area. So there's what we call a momentum and distance move here. So since there's what we call a momentum and distance move, now around this area, we do use what we call what main threshold. So we use what the 50% of this what liquidity void. Note this liquidity void must not be caused by what news. If it's caused by news, we expect a complete filling. If the liquidity void is caused by news, we expect market to fill it completely before buying. Note that if it's being caused by news, I don't expect you to be looking for buy around this area. But because it's not caused by news, this area will become liquidity, then you expect market now to continue buy. So after that, now it created what a higher high. So this shows that this time frame is still bullish order flow. So based on, let's say, because now weekly because daily is bullish. Now look again, because daily is bullish, H4 is bullish. That means daily and H4 order flow is bullish. I don't know if you understand my point. That means daily and H4 order flow is bullish. So this means daily and H4 are in what corrective wave. The order flow on this time frame are corrective wave to what is happening on monthly and weekly time frame. To what is happening on monthly and weekly time frame on this time frame. So now, because of this, this is what where you expect market now to read. Instantly after reading, we expect what a drop. You don't target more than that high. So after market read this very high, you can see something like 10 pips above this high, or 5 pips above this, or even 1 pips. So if you're targeting it, you're targeting this high, you don't target it with more big pips, or let's say 10 pips or 20 pips above it. No, we don't do that. So once market read this high, you can even expect what? A drop move, a sharp drop move. Now from the other weekly commentary that we'll be having, so this very buy move, everything that happened around this area, I marked it out and all played out exactly. Everything that happened here, none of them failed. So that is that. Now here, this has shown us that we are what bullish. Now from this range high to this range low, as your structural range low, this is the range you are trading. You are not expecting market to give us a deep corrective wave into this move. No. Now, because of that, now after having your what higher time frame bias here on this time frame, now the first thing you have to what ask yourself is this: where did market give us what first BMS? You notice around this area, around this internal structure here, around the internal structure here, the first thing you have to ask yourself is where is the what? Where market give us what? The first BMS. So where market give us the what? A range BMS is this area. A range structure BMS. So within the internal structure range, lower low, lower high, lower low, lower high, this is where market give us what? A little BMS here. Within the internal structure. So that is where we have what? A little BMS. So if market now is coming to induce primary inducement, this is the low we expect the market to use to come and induce. That means market is coming to this area before buying. But if market is not inducing that, that means we're expecting now market to induce all this what? The one that is being created by what? Internal structure. That means this lows. So market, firstly, it broke the first one. So as it broke this first one here, you know that now you are short-term bearish. You are short-term bearish. So as you are short-term bearish, lower low, lower high, lower low, lower high, a lower low, a lower high, a lower low was created. at this what former zone. So market now create what a higher high. Market now create what a higher high. So that means we have gotten what a break of structure to the upside. That means we have what gotten what a break of what structure to the upside. So since we have gotten a break of structure, because this was last low, lower low, a lower high, a lower low, a lower high. So since this is a structural range, you have what a break of structure. Market break this high. So since you have this break of structure to the upside, you are expecting market now to give us what a corrective wave to the downside. To what? To the downside. So as market is coming back, this is your what SC candle. This black candle here. Now after that, if it's too big, we have not yet talked about refinement and all. So market gave us what a short minor BMS to the upside. A short minor BMS to the upside. So as market give us a short minor BMS, now the next thing is where will market give us what a corrective wave from the last area of mitigation, which was this area. So market gave us a little retracement to induce liquidity. Where did market give us the first BMS, which was this low? So you expect market now to induce this low before you find your point of interest around this area. So market now use this area to give us what a buy. Now, if you see double top or double bottom against structure, double top, double bottom against structure, you don't call it liquidity. They're in line with structure. So market will not come and raid them until market is against them. So if market breaks structure, now let's say for example, as we are continuing the uptrend, they get our sales, it breaks structure. The first low that market will be seeking to take with speed is this double bottom here. There will become liquidity there. But because market has not shown any sign that if you take this double bottom, they are not liquidity. So after that, we have another short minor break of structure here. So after another short minor break of structure, you expect the market now to come back to what? Your primary zone. So as market came to primary zone, you take another buy. Boom, continuation to the upside. Till what? Your order flow on this H4 and daily is complete. So once this H4 and daily is complete to your sell zone, you're expecting what? A change of order flow based on higher time frame order flow. Based on higher time frame order flow. So you use two time frame to define order flow. You use two time frame to define order flow on each what? On each pair. So now you can see this little minor break of structure here. Now you can see this area. The reason why I call this one a minor break of structure and this one a major break of structure is that market can decide to break that little after breaking this low. You know that it use this one now as what? Inducement. Then do something like this, give a little corrective wave to the inside the range and continue creating a lower low. You know that. So that is why I call this area a minor BMS. Why this one is what? This is the first minor BMS. Why this one is the what? Internal BMS that we have here. So since market has given that, it has shown that it will continue to the upside. But even without that, as market get to our sell zone, you already know that you are what? Buying. You already know that you are buying. So once market gives what? A minor BMS, you continue to the order flow, to the upside. To the what? Upside. So this is the full idea of order flow. This is the full idea of what? Order flow. You use two time frame to define order flow. You use two time frame to define order flow. Now after that, 3-hour time frame and H4, they're almost the same. 2-hour time frame and H4, they're almost the same. Then another time frame you can consider is what? H1. So you consider H1 and M15 again. So once market now breaks structure on this intraday time frame, M15 or M5, at your point of what? Interest, this shows that you are what? The order flow has what? Now changed to what? The bearish order flow. So as market has done that, now you are waiting for market. Once market get to that sell zone, you are waiting for confirmation on those intraday time frame. But we don't know confirmation yet because we have not yet done that. So that is that for today, class.